The ASX just did something it hasn't done in over 3 years. And most Australians have no idea it even happened. While everyone was arguing about interest rates and house prices, the Australian share market quietly delivered returns that made property investors look twice. But here's the thing. The exact same market that created real wealth for some Australians in the last 12 months absolutely destroyed others. Same market, completely different outcomes. And the difference had nothing to do with luck. So here's the question I want you to think about right now. Is the Australian share market actually working for you? Or are you just along for the ride? Stay with me until the end of this video, because I'm going to answer that question directly. And the answer might genuinely surprise you. If you're new here, welcome. This is Nexus of Finance. Hit subscribe right now because every week we break down what's actually happening in Australian markets and what it means for your money. No fluff, no jargon, just clear, actionable finance built for Australians. Now let's get into it. The ASX 200 is the index that tracks Australia's 200 biggest listed companies. Banks, miners, retailers, healthcare giants. When people say the share market is up or down, this is the number they're talking about. And in 2026, this index has been on a ride that tells you everything about where the Australian economy actually sits right now. Here's what most people miss. The ASX is not a balanced market. It is dangerously top-heavy. The big four banks, Commonwealth, Westpac, NAB, and ANZ, plus the two mining giants BHP and Rio Tinto, make up a massive chunk of the entire index. That means if you own a simple ASX index fund, you are more exposed to Australian banks and iron ore prices than most people realize. And that single fact changes how you need to think about your portfolio. Now here's the part that should make you lean in. The banking sector has been carrying the ASX in 2026. Rising net interest margins, strong mortgage books, and a jobs market that has held up better than expected have kept the Big Four profitable. But, and this is critical, the moment the Reserve Bank of Australia moves rates in a way the market doesn't expect, bank share prices will feel it hard and fast. You are one RBA decision away from a meaningful correction in the single biggest sector of the Australian market. That is not a reason to panic. That is a reason to understand what you own. On the other side of the ledger, the materials sector, think BHP, Rio, Fortescue, has been caught between two forces. Chinese demand for iron ore has been softer than the boom years, but the global push for copper, lithium, and critical minerals is creating a completely different story underneath the surface. The old trade of just buying miners for iron ore exposure is over. The new trade is understanding which Australian companies sit inside the global energy transition supply chain. This is where the real opportunity is hiding in 2026. Let's talk about the sectors that are actually moving. Healthcare is quietly becoming one of the most important parts of the ASX. CSL remains a global giant operating out of Australia. ResMed is dominating the sleep health space internationally. These are not just Australian companies. They are world-class businesses that happen to be listed here. And in a market that is heavy with banks and miners, healthcare gives you genuine global diversification without leaving the ASX. Technology on the ASX is still small compared to the US, but it is growing. Afterpay's legacy changed how the world thinks about Australian fintech. The next generation of ASX tech companies is building infrastructure, software, and AI tools that are starting to attract serious institutional attention. And then there is the retail sector, which is telling a very honest story about where Australian consumers are right now. Discretionary spending is under pressure. Cost of living is squeezing household budgets hard. The retailers that are winning are the ones offering value. The ones selling premium products to stretched households are fighting for every dollar. So what does all of this mean for you personally? If your entire share market exposure is a single ASX index fund, you are concentrated in banks and miners whether you know it or not. That is not necessarily wrong, but it is something you should choose deliberately, not stumble into. If you want true diversification, pairing an ASX index fund with a global ETF gives you exposure to US tech, European industrials, Asian growth markets, and sectors that simply do not exist at scale on the Australian market. 2 funds, genuinely global exposure, and costs that are lower than almost any actively managed alternative. If you are just starting out, the most important thing is not picking the perfect stock. It is starting. A regular investment into a low-cost index fund, Even $200 a month compounds into something real over a decade. The Australians who are sitting on solid share portfolios today are not the ones who timed the market perfectly. They are the ones who stayed in the market consistently. And if you are further along, now is exactly the right time to look at your sector exposure, review your international diversification, and make sure you understand the CGT implications of any moves you are planning, especially with the capital gains changes coming from the 1st of July, 2027. Now, remember the question I asked you at the very start of this video. Is the Australian share market actually working for you, or are you just along for the ride? Here is your honest answer. If you know what you own, why you own it, and how it fits your long-term plan, the market is working for you. If you are just watching a number go up and down on an app without understanding what is underneath it, you are along for the ride. And that is the most expensive seat in the house. The good news is that one decision changes everything. Get clear on your strategy. The ASX rewards the patient and the informed. It punishes the passive and the distracted. If this video gave you a clearer picture of where the Australian share market actually sits right now, hit the like button, subscribe to Nexus of Finance, and turn on notifications so you never miss an update. Drop a comment below and tell me, are you invested in the ASX right now? And what sector are you watching most closely in 2026? I'll see you in the next one.